Hello everyone, welcome back to the Sri Lanka Morning Show. My name is Sonali Rodrigo and I'm coming to you from Tomorrow Financial Solutions. Today I'm going to be talking to you guys a little bit about what we're finding during this time of pandemic where people are looking to refinance or purchase properties and what are the issues that they might be facing when they go to the bank to get a mortgage. So let's get straight into it. First and foremost, one of the main things that we're finding is that the banks are changing their policies without much notice. So that means you might even have had an application put through and then a new policy comes into force, and then that means that policy gets applied to you, which means you might not be able to obtain the required amount of finances, or previously where you thought some of your overtime or shift allowance income or things like that might be taken into account to calculate your borrowing capacity might not get taken into account anymore. So a lot of the time we are finding that essential workers such as doctors, their overtime and allowances do get taken into account, whereas other workers' overtime are getting shaded quite significantly by the banks, which means that your borrowing capacity will go down. So a lot of the clients that we are seeing coming through our door have had their borrowing capacities go down compared to pre-COVID levels. So that's something to be mindful of if you're looking to purchase your first home or an investment or looking to refinance. Another thing that we're finding is with the valuations, a lot of the valuers are being very conservative these days, and they're putting risk ratings in relation to the valuations that they're providing to the banks, which means that you might find that what you thought your property was worth is not what the valuers are telling the banks that it's worth, which means in turn that your loan to valuation ratios will go up, and it means you might be having to pay lender's mortgage insurance if you're looking to refinance your loan. So that's something to be mindful of as well in these times, that we're finding a lot of the clients get caught out by this, where they think their property is valued a lot more than what the valuers are telling the banks that it is. Another thing to be mindful of is we're finding a lot of clients have put repayment freezes on their loan accounts. So you need to remember, if you are then looking to refinance, the bank that you're potentially going to go to want to see that you have started your repayments back and probably have had about 2 to 3 months worth of repayments, normal repayments going through since you put the repayment freeze. So you might not be able to refinance straight away as soon as you come out of your repayment freeze. So keep that in mind if you are planning on refinancing in the near future. If you don't need to do a repayment freeze, don't do that, because it does affect your ability to refinance your loan to a lower rate. Now, as you all know, we are in some of the lowest rates possible in the history of banking, really, in Australia, with owner-occupied rates being in the low 2s. So a lot of people should look at their home loans, and if they're paying 3 to 4%, should look at refinancing as an option, but always keep in mind the points that I discussed before. So you need to speak to some experts who will be able to guide you through all of these nuances and be able to tell you exactly what your borrowing capacity is, whether the banks will accept your current income as it is, what sort of valuation you could expect for your property, what sort of LVR you will get when you are refinancing, and what other issues you might face. We're finding that a lot of the banks are asking questions around the borrower's employment. Some of them want to see the pay slips to see if they're on JobKeeper or JobKeeper top-up. So we're finding a lot of the banks then don't take the JobKeeper amounts into the calculation when they're looking at serviceability and borrowing capacity. So then that becomes an issue as well. So you need to be mindful if you are on JobKeeper. There are some banks who don't consider it at all. Some of them only look at what your actual income is currently. Some of them will compare it to what it was pre-COVID levels and take the lower amount when they're looking at serviceability. So you really should make sure that if you're looking to refinance, that you speak to someone who's able to look at what it's going to be and how the banks are going to assess it before you actually put an application through. Because the last thing you want is to have a lot of credit inquiries in your credit credit file, which in turn again affects your refinance capabilities and your ability to get credit in the future. So there are a few things to be mindful of in this COVID environment if you're looking at refinancing or getting a new loan. So please be mindful before you go to approach the banks directly that you have a look at your whole situation and make sure you tick all of the boxes that they're asking to be ticked these days. Now, so I hope I have given you some things to think about. If you are, like I said, paying in the high 3s or even in the high 2s for your home loan at the moment, there are certainly rates out there that you can do better, but you need to make sure that you are across all of the requirements that the banks are looking at these days, because they're very conservative at the moment, and therefore that means it's going to be a little bit harder. It's not impossible, but it's a little bit harder to get loans these days. So you need to know what you're doing, and you need to make sure that you don't just put applications through willy-nilly and just get that affect your credit rating. So I hope that I've given you some things to think about. So until next week, bye for now.